Very good morning to everybody. It is FOMC Day. FOMC Day, and I'm just basically going to go over the email because this is summary, what you need to know. I've got the video there of what I found yesterday. 135,000 September 15th, QQQ 285 puts it 1562, $210 million short. Now, I had a discussion after finding it with one of the best traders I know, and he can really decipher what goes on inside of these large spread trades. And what he deciphered was that it was somebody who put out that dark pool of around 5 billion shares and was selling the 135,285 puts. Now, where I came from on my point of view is no problem. Somebody sold them. Somebody took that bet. Somebody is actually holding that bet. And everybody who knows how it works, the house always wins. I look at that as somebody is smarter than somebody else, and they decided, yep, no problem. I'll take your $210 million bet. Showed you the charts on there anyway. I made a typo here. I forgot to take the X out. Meta is reporting after the close. Amazon, Apple, Google tomorrow after the close. I got back into the March 17th SPY puts after flipping them the other day, and I took the 400s. No specific reason. I got a good $200 profit on the other ones, on each. So I decided, yeah, you know what? Why not go down a little bit? Got a lot of time on these, and I know where my charts are. So FOMC days 2022, we'll go through the summary here. What I've included here I found on Twitter, which was very nice. These are your these are your closes of FOMC day that I have on the right in the image. January, March, May, June, July, September, November, December, right? And here's the summary of afterwards. Right? January 26th, that's your range. What happened 2 days after, 9 days, 6, blah, blah, blah. July 27th, we hit the August high, and I'm go down here, show you all the charts, blah, blah, blah. The trend into the 2 o'clock meeting announcement versus the 2:30 press conference. So I've shared with you every FOMC meeting day as I share this, or I save this every single day. And as you can see where your trend is and what you've got going on into 2 o'clock and the results that take place after 2 o'clock. Now, it's nothing to say today isn't going to be something like November 2, where you can trade it, you can go here, you can do this, and you can do that. The intelligent trade, because you want your money to work for you, you don't want to work for your money, is to sit back, leave it all alone, let the FOMC meeting come out, and other than having some participation positions further dated out, whether you are positioned that your view is that we are going for my 43.25 without a dip, be in the long position. If your view is celebrating what's going on with the CPC, CPCE, the VIX, and just kind of where we are as far as a resistance level, go with the puts. Lowest intraday range on the FOMC days in 2022 was 88 points. And what I've included for you here is just a clean view so that you can see where we were at the time of these FOMC meetings, where these FOMC meetings took place in terms of the chart. And as I showed up there before, from a pre-meeting trend goes, organize your sock drawer. Find some clothes that have holes in them that you want to sew together. Wash your car. Reorganize your pantry, whatever it is, take a nap. You got nothing really that you're going to be doing until you get closer to 130, because the typical style is the trend will establish itself as you go into the meeting. And then after the meeting results come out, then typically you will reverse the trend. Typically, doesn't mean all the time. Again, I will cover that when we go over this a little bit more. So again, for me, my upsides, all right, my upside pivots are that obvious 4,100 level. You got 41.15, 41.19, which fills that gap. 41.36 and that 41.55. 41.55 being your 50 retracement from the drop. Now, on the downside, you've got your 40.22, which is very clear, very established with all of our 40.16, no lower than 40.16. Then you've got your 39.98, 39.90. You got your two fibs right here, COVID and your drop. And then you've got 39.70, which is your 2022 trend line, and possibly 39.50, 39.55, which is where your 200-day and 50-day moving averages are, and it's also your low from last week. So again, you've also got your 50s there, your 39.32, 39.29, like I've shown in all the other emails, going 39.20, 39.30 support up in this area. Now, if you are going to be in an FOMC trade heading into the trade and you have a stop loss on your trade, you are going to get stopped out, especially over on the futures. Whether you're long, whether you're short, that 1 minute candle wick that comes out at 2 p.m., it will stop you out. So, be ready for that if you are going to be holding a position. The two positive runs that we had after the FOMC, the March 16th and the July 27th meetings, and I want you to see where we came from. As you can see, the major drop as you went into the March low and where you were. As you can see here, the major drop you came off of the June low and where you are. Now, again, where we came from after that August, that nearly 20% drop, lows of the year, and where we've been recovering to and where we are right now, again, it is to be deciphered to each and his own. For me, I'm happy to have a further outdated puts position to participate in the event that this becomes too volatile too quickly and I need to be involved in the chat room giving alerts rather than making trades. So as of right now, we're down only 7 points. We were down 13 when I did the email, and with 88 points being the smallest FOMC range, your ranges as of that time would be 41.51 to the upside, 39.75 to the downside. Now, the SPX options are priced for an implied move of 51 points as of 6:30. As of right now, they are still priced in for a plus or minus 51 point move. That will change as you get closer to 2 o'clock. Now, moral of the story. A lot of people know Michael Burry, the Big Short. Back in December, he posted out a tweet. His tweets are difficult to decipher sometimes, but in December, he posted out a tweet and said, "I am not short." From December, obviously, we've had this nice rally. Here it is that he sends out last night at 7:04 p.m. Eastern Time. Sell. And Jim Cramer also posted out, "It's bullish. It's time to buy stocks." Again, decipher social media how you would like to. The two times that we ran March and July, March topped 46.37, only a couple of weeks after that, and then it dropped 17.8% into May. July actually had a run of almost 4 weeks when it went over there and topped 9.4% higher in August, and then had a 19.3% drop in October. Now, again, the highest mark in 5 months, going back to September, where the day after this 41.19, we dropped because of the CPI. We had the CPI report on the next day, and we had that big drop down, and it took us all the way here until that move here in the 1st of December to 4,100 to fill that gap, and we still haven't filled the gap. The gap goes to that 1928. And you can see here what you've got, your ascending triangle, very bullish pattern. Zoom it out, and you can see here where your 4,100 line goes. You've got your Russia invasion. You can see here how it was resistance when you were below it over here in May, became support as you went into June, fell through it. We pierced through it over here in August, and here we are playing the game over here at 4,100. So again, it's all about how you view it, how you want to look at it, because I could draw that trend line coming off of the high, and you could see it's cutting it right in the center. So wait for 2 p.m. Other than your further dated out participation, puts I put because my view is still very, very bullish. looking for 43, 4,500 as we go into the year. But as of right now, in the short-term period of time, I am still looking for a dip, and I am looking for that dip to be down into the middle to low 3,900s. I am not expecting us to get down into the 3,800s. If we do, I will be more aggressive about looking for some upside moves. But then again, we will also be setting off some alarms, so it may take a little while longer. The SPY and the QQQ for today. So here you go again, the 2022 resistance line, as you can see right there. This is a 15-minute chart, so it's not as accurate when it comes to the line drawings. But yesterday on the 1-minute chart, as I shared there in the alert room, we came precisely to that trend line, precisely to it, made contact with it. And as you can see, this is pre-programmed inside of the algorithm. You can come over here and you can look and see how this 406, 406.50 area, where we reached to yesterday, obviously had some issues over here when we were back here on Friday before we did that stretch. Where we wind up for today, again, not there to decipher it. We'll wait until the results come out. Here again is your QQQ. QQQ 294 was the target that I was posting to everybody. That's exactly what we got yesterday, right up to that 294. Yes, 297 is obviously still in play as of today. You will be looking for something that will be stretched as you get into the report. We still have the big report coming out tonight and tomorrow for the big guys. And this is your September CPI gap up here, 3,310. So again, it is quite plausible. And then AMD, pros to their earnings, like I said, complete waste of time to play it. It's up 2 points, 2.8 from the close yesterday. Anybody who bought calls or puts, you're getting burnt. But just to show you here, the 50% from the all-time highs line is right here at 82.23. You got a gap to be filled at 75. You can see where your trend line is, which is basically right around there, just below or just above 75. And your big line is this 72.50. That's your May 2021 and your July 2022 lows. And it has played harder than anybody else out there with AMD. So again, if you wanted to take part in the gap fill, considering that it will be much more discounted than playing something like a SPY or a QQQ because it is an individual stock, message me in the chat room and we can obviously go over that. As for the spreads, yesterday got run over. Catalyst being that we hit that trend line over there on SPY. Couldn't tell you because that was as we had that massive gap down and we went into gap up and filled the gap completely overnight. We did have that report came out at 8:30 where the cost of labor had dropped. So adding a little bit of fuel to the fire, quite possible. But as for this, 40.70.19 being broken and closing up here at 40.76, you saw it there as I was posting there in the spreads room late in the afternoon. You can get out of this trade. You can get out of this trade. You can get out of it. Here, it was right there. It was just on it right there. What are you doing here? You're rebooting on me. Come on, man. I'm making a video. What are you doing? Right there. You had the opportunity to get out of the trade right there at 330, 345. Right there. You were down to 60 cents on the risk. So that's your up $1. The safe edge was down to a nickel. Instead,
Mama pinga, pinche joto, puto maricón.
And yeah, so I'm going to go over a checklist. I'm not going to waste time on it today because as you can see in the email, there's absolutely nothing about spreads because there's no spread to be taken today. But I'm going to go over a checklist of things that people need to think about because when you want to succeed doing options as bad as you want to breathe, you're going to start making money. But there's a checklist that you're going to have to put yourself through because the women were messaging me, telling me how either they made money, very good money yesterday doing spreads, or they took advantage of what had taken place prior to it all happening as it got closer to the close, and they rolled their position out to take a better position with time and to actually collect a little bit more credit. And then the men all sat there going,
Police! 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 Help! Police! Help! Police! Help! Help! Police! Help!
So we'll go over a checklist as we get into the rest of the week. Maybe I'll do it on the weekend, but I will see you in the chat room. And one last thing that I will point out here is we closed down 5.8%. Sorry, we closed up 5.8% for the month of January. Going back prior months, we've closed up 4.57% in November, and then we wound up shutting there in December. We closed up 7.2% in October, and we wound up dumping there at the beginning of November. So we'll see how it all goes.